Welcome back, everyone, to this week's Southern California housing market update video. My name is Stephen Mead. I'm the managing broker here at Domicile Real Estate. And of course, if you are new to us, for us, Southern California is our statistics based on Los Angeles and Orange counties, though actually given our market in Southern California, San Diego, Riverside, they are probably not too dissimilar from these statistics. As always, if you have specific questions, we'd love to hear from you, so definitely reach out. I'm going to jump right into it because we have seen some changes in the last couple weeks. Unless you've been living under a rock, you probably noticed that mortgage rates have gone up a little bit, and been kind of wondering, like me, how the market really was going to react to that. My viewpoint has been that we've been so inventory constricted and demand and supply have been so far out of balance that it really wouldn't change very much, at least not in the short run, and not if those increases in mortgage rates were relatively reasonable and minor. And I think that is what we're seeing. But I'm going to jump back into the statistics. The numbers don't lie. And we are a big fan of looking at the numbers around here and making good decisions. So without further ado, we're going to jump into it. Let me pop on the screen share here for our slides that we have prepared for you. So the first thing that we track is this total active listings. And really, this has been sort of our stubborn number throughout 2021. If you go in here, you'll see that our blue line denotes under 1 million and our red line denotes $1 to $2 million. So this is total listings with an active or a coming soon status, meaning they are available, they will be available soon. And if you look here towards the beginning of the year, we had sort of this low point. The first week, we saw this kind of, first week, 2 weeks, we saw this kind of jump in inventory, and then it just really petered out. And if you look here closely, what you notice is not only has this graph kind of stayed the same, but it's really refused to grow, right? We're not building any new inventory. We sort of got caught in this funk that between Christmas and New Year's, that holiday low level of inventory, and really things haven't changed. And this past week, these numbers dropped by a lower rate, but if you look, this is almost a relentless but slow march downward in inventory, and we just haven't seen those new listings come and make up for that. We just haven't seen those new listings rush in to sort of build back some of that inventory. So if you're a buyer in this marketplace, it might seem like there's just never any houses for sale, and it's not you. We see that in the numbers. We are just at incredibly low levels of inventory. We just haven't had a chance to build any of that inventory up. Now, if you're a seller, of course, the opposite's true, right? This is great news for you. It means that if you have a property that is a bit of a scratch and dent special, right? Maybe it's not fully remodeled. Maybe it backs to railroad tracks. Maybe, it has kind of an unusual layout. Right now is really going to be your time to sell, because buyers are going to be more willing to either take on these projects or live with some of these things that are a little bit less than ideal. In another market, a home like that might be a lot harder to sell, but in a market like this, there just aren't enough houses to go around. And so if you are priced reasonably, you should get activity in a short period of time on your home. If we go through here, right, if we look at the total active listings is kind of the product of how supply and demand are reconciling, right? So if we look at this over time, it means that the supply and demand situation is getting more and more tilted in favor of demand, as we see this going on over time. Now, if we're looking at our supply side, right, that's our new listings. What new homes are getting listed in the market? And here you see a much more traditional graph, right? New listings plummeted around the new year, and then boy, that first couple weeks of the year they took off. And guess what? These have actually steadily grown a little bit, right? So since that second week in January, we've actually seen a 10-15% uptick in new listings coming onto the market. More sellers are putting their homes on the market, especially if you look in this under $1 million category, right? It seems to come like they come on the market, then things stagnate, then there's another jump, then they stagnate a little bit, then there's another jump. And we see, look at the shape of this curve, right? Like, even in the past week, we've seen a pretty good growth in new listings. So sellers are finally starting to figure out this is a great market to sell in, and it might not last forever, right? The interest rates definitely, if those go up by a lot, that could cool this market to some degree. Now, if this is the supply side, right, this is new homes coming into the marketplace, let's look at what's going on the demand side. And if you look at this, um, you see kind of very similar shape. But what's interesting here is this is the reason why inventory is not growing. If you look back here on our new listings, what do we have? Uptick, uptick in supply. What do we have here? Uptick in demand. And I think as long as these are in step, that inventory number is really never going to change that much. We're going to be kind of be stuck with the same amount of inventory until these get out of balance, either because supply is growing faster than demand or the other way around, which will make inventory drop. Um, Now I'm going to go off screen share for a minute because I'm going to talk about an effect, and it's hard to quantify this. Like I'm looking for a way I can really measure the data to try and see what's happening. So I've noticed a trend that whenever we have low interest rates and there's a bump, right? The interest rates either they bump up or it's a blip in the market. I have noticed that there is a little bit of what I call panic buying, right? These are people who are watching, if you were pre-approved for $700,000, we'll use this as a good example. If you were approved for $700,000 and interest rates go up by, let's say they go from 2.75 to 3%, which I think is moderately accurate to what's happened, you're going to notice that purchasing power, you had, that 700 may now only be a 690. And I think a lot of people will sort of panic in that situation. And we see this kind of huge bump in sort of new escrows. And I think that's what we might be seeing in this chart here. But the problem is this, you'll notice up here at the top of this chart, it says 14-day new escrows. And the reason why we did that was to try to avoid this sort of caterpillar effect where one week we'd see a lot of new houses come to the market, then we'd see a lot of new escrows, then a lot of new houses. We wanted to smooth that out, but what it means is that it takes us a little longer to see, is this that panic buying blip here? Is this people realizing that their affordability is at risk and deciding we just need to find something and write whatever offer we can, and we're going to see this temper next week? That I'm not sure about. And I think we're really going to want to stay tuned next week to see if this sort of new escrow thing eases. Was this a blip, or is this the beginning of spring and we are just seeing more buyers in the marketplace? The weather has been great. Buyers are out there. I think only the next week in our stats will we tell which one of these we're getting. So if we look at our absorption rate, this is our method of sort of reconciling how fast new things are coming on the market with how fast they're flying off. And sort of, I think what you can notice here is pretty much through the month of February, things have been pretty steady in this regard. This is sort of our new normal. We are going to see in this under $1 million category, I think we're just permanently in a situation, or at least not permanently, but for the immediate future, where we are seeing an absorption rate above 90% or near that 90% number, which is a hyper competitive market. Even for our 1 to 2 million, which is a luxury market, what we are seeing here is that we are above or right around 80%. I actually think we're a little bit above that 80% mark. That is still a very competitive market. And I just don't see these numbers changing. I mean, you look all the way back through February, look at where these numbers have been. They haven't had these drastic big changes week to week. These have been pretty steady. And I just don't see these numbers really easing unless we see those interest rates really start to jump up, which is going to then start to really affect affordability. I've got a last slide that talks a little bit about that historic affordability, and we'll go through that. So this was probably the biggest surprise, of this week, right, is looking at our closed prices. Now, last week, we kind of hit these dramatic new highs, right? If you look here, these peaks were our numbers that we saw last week. And then this week, we're seeing these drop in all three of our price categories. Our entry level 25th percentile, our median prices, and then our upper luxury 75th percentile. So we're seeing this across all ranges. So normally I would say this looks like a blip, but I don't think it is. Now, what are some of the reasons and some of the causes for this? Well, it's really important to remember that these closed prices are based on contracts that were signed 30 to 45 days ago. So that means basically from the middle of January to the beginning of February is where these prices are. Why were these soft a little bit? The other thing is, if you look historically, right, since the beginning of the year, we do notice kind of this almost cyclical nature on these prices. And you see it in all of our price ranges, right? There's a little bit of an up and down. And when you look at where do these fall to, these are still new numbers. I mean, look at our 75th percentile. I mean, we are still above any previous peak. If you look here, it is the same story. We are still above any previous peak and even in our entry level. So while, if you look at these charts, you'll say things have fallen. They haven't really fallen. Um, I'm very curious to see where these are going to go next week and really to try to plot a trend line on these since the beginning of the year. I think if you kind of read between the lines here and you look, you definitely see an upward trajectory on these prices. And I think if you're a buyer out there in the marketplace, that's really what you need to understand is that when you look at the trend line since the beginning of the year, it shows rising prices. It does not show falling prices or even steady prices. It shows rising prices. And I do think that's the market that we're in because we are just very, very inventory constrained. So this is kind of a fun chart. And I like this to sort of take the temperature of the market. And one of the things, if you look at this, you know, this is sort of the opposite. This is sort of inversely related to how hot the market is. So when these numbers are falling, it means the market is getting hotter. That is the direction the wind is blowing towards a hotter market. And when you see these numbers go up, that means the market is cooling a little bit. So if you look back here towards the original part of the year, I mean, look where we were. These numbers were pretty big, but we've seen these numbers kind of be on a steady decline. Now, this past week, they both went up a little bit, but I'm looking here, when you look in the grand scheme of the history of these numbers over the last couple months, these are still very low numbers, meaning the percentage of homes that came on the market in the last 2 weeks that are still available is low. These homes are getting snapped up very quickly, which I'd imagine might sound like stating the obvious, but I think it's really important to understand sort of what direction the wind is blowing on market competitiveness. I think this past week things got a little bit easier. I don't really know how much though. These are still very competitive numbers. Now, if we look at our list to close ratio, that's another fun one. I mean, we broke new ground with our 102% for our under $1 million category. I mean, that just means that people are putting up one price for a house and buyers are just writing offers in another. Our 1 to 2 million price range, that's been a much wilder ride, right? Like we saw these peak numbers, then they kind of fell. But I think overall, what you can see is since the beginning of the year, these numbers are higher. Since the beginning of the year, these numbers are higher. I'm going to go off screen share for a second to talk about something. I think a lot of people have a tendency to sort of hang their hat on a statistic, on a market statistic they like. And that's a very, very dangerous game to play because you can be blindsided by the information that you don't have. There are a lot of reasons that these metrics can move. So, one of the things that we try to do, and one of the reasons why it seems like we have different statistics that are measuring similar things, it's because we're trying to look for sort of a corroboration of conclusions, right? Like we want to see multiple indicators pointing to a tightening or a loosening market. We don't just want to point to one statistic and say, this is definitely what's happening, because there are reasons that one statistic can be thrown off. And obviously, the more metrics that you are using, the less likely it is that you're getting fooled by one metric that's being affected in a way that you may not understand. So if it feels like I'm repeating myself to some degree, or why we kind of go over these stats that offer differing sort of viewpoints of the same piece of information we're trying to drive at, the reason for that is because it makes the data a lot more reliable. When we see sort of a consensus opinion among the statistics, that gives us a lot more confidence in the conclusions. So I'm going to jump back in here. Sorry for that kind of moment away, but I think it's important. Um, Again, this is still an incredibly strong market to be in. Anytime these numbers are over 100%, it means on average buyers are bidding over the houses. Now, if you look at our days on market, this is kind of a little bit mixed, and I'm going to talk about how we've chosen this graph to make the data clear. But something I don't like about this data is that the reality is this is only a 1 day difference week to week. So if you look, it says days on market for new contracts under 1 million. It went up, but it only went up 1 day. 1 day is a pretty minor movement in the statistic, enough to be sort of noise. I would call this holding steady. Same thing up here. If you look at our under 1 million, it declined by a day. These are not really big, huge movements. I honestly was expecting bigger movements given the interest rate. I thought we might see a little bit more of a market response. And I just don't feel like we're really quite seeing that just yet. Um, you know, I It's always interesting when you see data in the news, right? Like interest rates go up, war declared, these sorts of things. And then we have to wait a week to kind of see how some of the data peters out. And, I was expecting maybe even a little bit of a bigger movement, but I think we are so supply constricted, and we are in such a position where demand is exceeding supply, that I think demand can stand to lose a bit, and we're not going to see wild market reactions from that. Now, I promised you an affordability chart, and I want to talk about that affordability chart with you. If you look here, you'll notice that things actually got a little bit better in the past week. And that's mainly driven by the fact that that median price dropped, right? I mean, we saw these kind of crazy new highs last week. If you look historically, where do we stand, right? Versus July 2018, this is sort of our baseline. We enjoyed homes being cheaper, cheaper, cheaper. And then starting this January, we started heading towards this 100% number, which means we're crossing that threshold. But I think it's really important to understand something when you're looking at this chart. This chart is not adjusted for any inflation. And if you look at where we are inflation wise versus even in our low inflation environment, we are actually probably about 6% higher just from inflation of goods than we were in July of 2018. So, I mean, the reality is, we're hitting here in over 100%. I'm not sure that in real prices, our payments have actually exceeded where they were in July of 2018. I think we're starting to get close. But when you think about it and you take this in context, this is still an amazing situation that the payments of a median priced home is still right around where it was nearly 3 years ago. I think that's pretty amazing. Anyhow, that's kind of our stats for this week. As always, we really appreciate you watching. We appreciate your questions, your comments. Don't forget to like, subscribe, hit that notification bell. I should probably get some cool graphics or something for that. Is there anything that we're not doing that you'd like to see? If there's something you think is missing from our analysis, we'd love to add that in there. I'm the kind of person, I like to give people the data that they think is important to help them make decisions. Sometimes we miss things. So definitely, if there's something that you're not seeing that you'd like, we'd love to add it. As always, like I said, thanks for watching. We are here to answer your real estate questions and fulfill all of your real estate needs if you're in the Southern California area. And we will see you again really soon.